So yeah, when you talk about Aussie USD, yeah, we're definitely still looking at a short right here. Okay, you can see it on the 1 hour chart, but perhaps a pullback to this S3 area. If price tends to settle there, okay, maybe there's going to be room for a trade. But again, I don't want to short it down at this exact level because it's sort of near the bottom, and I just hate selling bottoms and then having to buy back on retracement. So I would prefer to see a pullback maybe up here to the S2 to maybe get into a short, or possibly even the middle band or the S1. Yeah, okay, yes, these are the daily pivots there. Okay, these are the S1 and the S2 lines right there. And then if we actually scrolled it down, you can see where the S3 is. So it just gives me an idea on the short-term chart where we are overall in terms of the overall picture of the market. Because a lot of times, I like to segment out the market and say, okay, if we're talking about a range, and today we would really call this a range, but we did have some nice up movement and then some down movement. If you know where that is in terms of the longer term time frame, okay, this can be an opportunity that if you can enact a trade that is on the side of the longer term trend, then perhaps you can have even a longer trade in there. So something that maybe starts out as a day trade could potentially become longer term. So, that's sort of why I look at it that way. So, where were we? Oh, let's see. So, what else do we have going on? Let's look back at Euro here. Still hanging around the bottom. I want to look at Euro Yen again. Okay, same deal. All right, we're making new lows here. This is still 5-minute chart. So again, we're not looking to just go flying into anything at this point. I want to take a look at dollar Swissy. Okay, dollar Swissy, this is actually the pivot right here. Okay, it's 77, and we're sitting just above it right now. Let's see what's happening. Man, as quick as these interventions happen, it's like you give back the gains immediately, and it's like, these central bankers are trying to paddle a boat upriver. They've just got this tremendous tide moving against them. So I'm guessing that at this point, gold is probably, look at gold, wow. 1680, that's something. So let's see here. Is interested in pairs with one strong and one weak currencies, CHF versus USD or Euro, for example. Okay. Well, when we talk about weak or strong, it's interesting. I think we can talk about the Swissy as a strong safe haven currency, but we also talk about the dollar as a safe haven currency as well, somewhat. Okay, Euro Swissy is probably more appropriate to look at weak versus strong. But when you think about it, it's kind of like, obviously the dollar is weak as well, and it's potentially going to get weaker if people think that QE3 is going to happen, and it's not only a possibility but an inevitability. So, when you talk about different risk themes that happen in the market, when you talk about generally saying risk off, which is what we're looking at today, okay, things like the Swiss are strong, okay, but the dollar actually has a little bit of strength as well. And you can see that as evidenced by Euro selling off here. So Euro Swissy is the weaker pair today, and that is something that we can look at. You see, do I find it harder to trade the U.S. session? It reverses so quickly with all this news coming out. Well, I tell you, it's sometimes it can be difficult, but it really has to do with I think the style of trading that I do, and it's really just shorter term trades from day trading to scalping. And, a lot of that, this market, is good for that, but you have to be very quick, to stay with it. Because once those overnight trends start happening, you get maybe one reversal, perhaps another reversal, and then boom, hopefully the trend continues. So, right here we're looking, Euro Swissy again, and it's going to be interesting to see what the SNB, can do here. They lowered their interest rates the other night trying to weaken, the Swiss franc, but you know what? It's when you talk about a safe haven currency, nobody cares what the interest is. All right? They just want to know that there's safety there. So, that's one of the reasons why, wow, look at this. Let's go back to the 5-minute here. And you can see this puppy's just selling off. It means Euro is weak, weak, weak. Let's look at Euro Yen. Okay, we just busted through this R2 level of resistance here, which potentially could have acted as support. Doesn't look like that's happening. but we can really see some euro selling. And here's something interesting. I show you guys this from time to time, but this is sometimes it's a little bit too fast for folks. But what this is it's a scalping setup that I use. I use it on Euro USD because the spreads are fairly tight on that, and it's a 1-minute chart that we're looking at. Okay, this is a Heiken Ashi chart. All right, and what it's got on it, it's got 3 sets of Bollinger Bands, the 1, the 2, and the 3 standard deviation band. And essentially what I'm looking for is quick scalps that happen once we hit those outside of the bands, and we get a Heiken Ashi confirmation that there could potentially be a reversal. Well, what shows you a Heiken Ashi reversal? And unlike candlesticks, well, I guess it can be similar to candlesticks. And you have to remember that Heiken Ashi is different than candlesticks. So these long wicks do not mean support, for example, as they would in, say, a candlestick chart, but rather you want to see these. This actually means it's in a strong trend. So this long wicks are good in this instance. But basically you're looking for dojis on Heiken Ashi to show you these reversals. And if you can get them as you're fading price action from one deviation to the next, preferably on the extreme or bands, all right, then sometimes you can get some decent trades out of that. So I'm going to keep an eye on this Euro USD here. And, you know, again, it's so hard to just kind of hop in and catch the falling knife today, so to speak. You know, it was one of these things where earlier this morning, it was really, I don't want to call it a layup, but, you know, you see, you know, U.S. stocks down, and right now it looks like Dow's down 200. Okay, you see stocks down, you see oil down, all right, gold is just sort of middling around, and you've got euro, you know, was trading up a little bit, you've got yen weakness, you just knew that that was ripe for reversal. You know, the flight to safety sentiment is just too great to, you know, have one of these interventions, especially, you know, now that, you know, they're taking a nap or they're sound asleep in Japan, with the overnight. So, you know, this is the kind of thing you got to think about when you're looking at these markets. You know, you're trading Forex, you really got to think as a global macro trader and how all of these things sort of line up. You know, someone asked me the other day, well, you know, why is Aussie going down? Gold is going up. And we know that, you know, the correlation between Aussie and gold is usually pretty high. Well, it depends on how gold is trading. Gold is an interesting instrument, okay, because it can trade two ways. Okay, gold can trade with the commodity block when times are good, okay, and that means, it's part of the risk on trade. All right, but it can also trade, the opposite in the risk off block as a safe haven when times are bad. And you can see that gold obviously is trading as that safe haven. So that was one of the reasons why, you know, it's sort of decoupled from the Aussie. All right, so let's go back and see here. I'm guessing Aussie's down a little bit lower. Okay, sure is. And what do we have there for support? Oh, this is back down at 105.25, so we got a ways to go there. Let's go back and look at Euro Swissy. Continuing to sell. Okay. Let's see, Euro Yen, we're still looking at that. Wow. That just blasted right through that R2 area, which looks like next level's down at R1's just under 111 here. And you can see stochastics very oversold on a 5-minute chart. So I'm going to keep an eye on this and see what sort of develops. But you know, if you have anything you want me to take a look at, you know, by all means, fire it in. Be more than happy to scope it out. If there's anything that's going on in the market that you don't understand what's happening, I'll attempt to give you an answer. I can't necessarily say that I'm going to be right, but you know, you have to sort of think of this market and the way that things react is it's you know, both sides of the coin situation. You know, you can make arguments for both sides. For example, you know, tomorrow's non-farm payrolls. Well, what's going to happen to the dollar? You know, is the dollar going to strengthen if these numbers are good, or is it going to weaken if these numbers are good? You know, what's going to happen with some of these correlations that happen in the market? You know, normally dollar's stronger when stocks are down. Stocks are up, dollar's weaker. Can we find a situation where both stocks and the dollar can go up at the same time? Is that possible? You know, so these are the type of things you got to think about. And, you know, when you consider why money is moving to different places, you know, you can talk about the dollar as a safe haven, and people rushing to the dollar, but I think it really happens more, under two circumstances. And, it's really when there's like structural issues and major problems. For example, when things happen with the euro, okay, that usually gives you dollar strength. Or, you know, for example, with the banking crisis, of 2008, you know, when people were concerned that, you know, the financial world was going to collapse, that's when people are running to the dollar. But sometimes when you just get bad news, you know, sometimes people go to the dollar, sometimes not. It depends on what the situation is. If we were already in the midst, say, of a quantitative easing cycle, all right, if we still had QE2 going on, let's say, and the numbers came in bad tomorrow, then it's quite possible that the dollar could weaken. All right, but if we're not in that cycle and the numbers come in bad, dollar could strengthen. But are people concerned that Bernanke's going to enact QE3? Well, what happens there? So regardless of what happens tomorrow, there's going to be volatility as the market tries to sort itself out. I mean, when you think about this non-farm payrolls report, I know you guys are all seasoned traders and watch this thing, and you know where the volatility is, and you know how crazy these things can be from time to time. But right now we're really at that tipping point where it's sort of like, hey, what the heck's going to happen? Is the global economy getting so bad that dollar's going to strengthen, everything else is going to weaken? What happens if Bernanke comes out over the weekend and says QE3? Is that going to cause the dollar to weaken, or is that actually going to cause more strength, even with him flooding the market? Because are things that bad that we need QE3 in response to every bad data point we get? So there's a lot of interesting food for thought, so to speak, in the market.